Hello, and welcome to Beyond the Firewall, the business bycast, where tech meets business. Get expert insights and real-world business leaders, IT experts, and the latest trends in bite-sized episodes. Stay ahead and explore what's beyond the firewall. And welcome back to another episode of the Beyond the Firewall, where we're always bringing amazing guests and speakers for you to listen and enjoy. Today, I've got this amazing speaker and guest, Rupak. Rupak, why don't you tell us a little bit about yourself?
Yeah, thanks, Erez. Excited to be here. So I am the managing partner of Kicker Capital. I also do some consulting fractional CTO work. My journey has been, I started off as a computer engineer. Actually, I'm also Canadian, dual citizen. And so my engineering degree is from Waterloo. Lived in Ontario for a while, and then kind of moved on to other companies. Kind of continued to 20 years of building technology products, teams, businesses. On that journey, I've been a two-time founder. Originally actually had a software development shop named Kicker. Also tried a VC-backed kind of attempt at a startup. And then actually found most of my success in the growth phase of companies, startups, Venmo, Harry's, and then Wayfair. I've enjoyed kind of growing and scaling each of those. And then kind of more recently got interested in applying all that experience back into the lower middle market, the small business world. And so I call myself an acquisition entrepreneur now. I'm looking to, go acquire a small business and bring some of what I've learned in my life and take a new journey.
Well, congratulations to you. It sounds like an amazing journey. And, going from these big, capitally funded Venmo and Wayfair and, these enterprise level type organizations that I think Wayfair like exploded during the pandemic. And it was like I think it was more of a startup, but it became now a household name
Yep.
during the
Absolutely.
pandemic. And obviously everybody knows Harry's, and that's been a massive market disruptor. So yeah, kudos to you to being on all these wagons and enjoying the journey. And, welcome to the other side of or should I say the dark side or whatever you want to call it, the entrepreneur side of the world, in the sense of that it's an interesting realm of being an entrepreneur and kind of having that blood, sweat, and tears and sleepless nights and kind of moving into that world of entrepreneurship.
Yeah, I've had to do that as well. Like I mentioned, as a founder, and I'm trying to kind of thread the needle here a little bit. The early days are like really hard, so I have like total admiration for every founder out there that's kind of persisted and succeed through those things. And so as I think about acquisition, like I want to start at the 0.5 or the 0.9 and then grow something from there. It's also kind of fits my skill set. I've learned that through these experiences in my career where my skill set, what I'm good at, and so I don't know. I don't know if I'm taking a shortcut, but I'm definitely taking a journey that's hopefully a little bit different. There's still obviously a lot of sweat and hours and effort that needs to go into to any small business.
Yeah, and it's interesting because not every entrepreneur out there, if it's out in IT, be it in cybersecurity, managed services, or any sort of IT consulting agency out there, I would call it like almost the three pillars. There are guys out there that are really good in starting it, getting it off the ground, getting it to that $1 million mark, and then they don't know how to scale it beyond that because at that point in time, they don't have the expertise of being good engineers or really good tactical people, and then scaling operations and scaling teams and scaling processes and becoming into that phase two is definitely a challenge. And
Hmm.
I know that that was a hard one for me. And then on the flip side, you get to that envelope of, north of 5 million or north of 7 million where you don't know your customers anymore. And you don't even know anybody. You may not even know all your staff, depending
Yep.
on the kind of business you have at that point. And now you rely on systems, processes, and everything else to scale the company, and you're just a cog in a bigger wheel now. So it's pretty, depending on where your skill set is. I think it's critical to understand the value of where that fits and where you want to kind of jump in on the wagon. So, yeah, no,
Yep.
I agree with you.
And actually, that's a big kind of personal reason. In my corporate career, I was getting to that point where I didn't know my employees, and it had grown. And then as I thought about hey, what's the next step in that corporate ladder? It just wasn't exciting anymore. It's like it's gonna more and more dilute, and I want to get back to having 10, 15, 20, 50 employees and working with that team and then yeah, knowing every customer, directly. mm, And so I can kind of provide that level of, support and build that trust. That's kind of what, a lot of my career has been built on.
Yeah, no, I hear you. So, talking about our space and both of us being in the tech sector for quite some time. IT's evolved, in the sense of 20 years ago, it was break fix. You sold a customer a firewall, Today, everyone's talking about AI and stuff like that and all this next gen stuff. What would you say is the fundamental shifts and changes that you're seeing in the IT space from a tech support and managed services, cybersecurity space?
Yeah, I mean, it's about proactivity. I think the shift's been happening, but even more so with AI, right? It's, which, companies are being proactive. How are we being proactive with our clients to make sure that they're thinking about, bring up the cybersecurity threat and what, AI poses as a risk or as an opportunity, right? And are you taking that as a proactive approach to say it's like, hey, this is coming and we've got to, you know, look at what the potential attack vectors are and how do we stay ahead of it? Otherwise, put your entire business at risk, like, could theoretically even get shut down, right? So I think the companies that can, and it's specifically IT services providers, right? If you can rely on that trust that you have with the customer, right, and right, kind of truly be a partner and be proactive, that's where I think, an MSP will, kind of rise above the ones that are kind of still working the reactive model or afraid of embracing AI. So I'm a big proponent of like, it's coming. And so, you can choose to embrace it or not from an AI standpoint.
Right. And do you think like business leaders today in the space are prepared for all of this change?
It varies, right? I mean, I talked to a bunch of different owners, of mostly small businesses, but different industries. And I find some are absolutely kind of ready for it, leading the pack, want to innovate. I also work, like I do some fractional CTO work. So I also kind of work with smaller companies in that sense that are startups. And it's, incredible to watch and be part of that journey where you're innovating and moving so fast with AI, and you get tripped up every once in a while, right? And you're like, there's something there from a security standpoint that we, didn't address. And so you kind of have to take that, maybe step back a little bit, address it, and then go back forward again. And then there's others that just, don't want to have the conversation, right? And I see the risk for them is continuing to lose market share, lose customers, lose employees and going down kind of that negative spiral. So, um, we're talking about like acquisitions as well. And so it's like the type of company I'm trying to look for is like, hey, how can I help them modernize as a company, right? Maybe they're already on that journey and maybe they're kind of leading the pack, but it's, the ones that have that legacy that have done well and, aren't necessarily willing to make that paradigm shift. Not that they don't see it, but it's just they don't have maybe the energy to say, "Hey, I'm going to go do that and make this paradigm shift." Like that's the kind of company of like I do have that energy, right? And I do want to make that, and I want to go, continue that legacy forward.
Right. Yeah, it's interesting. I find that precisely on your note there, where I meet a lot of fellow, guys running their businesses and stuff like that, and half of them are either saying it's not going to impact me. I'm at the tail end of my career. I've got 3 to 5 years left. Whatever the runway I've got, good to go, and thank you very much. And then I've got the other ones that are like, okay, we've got to embrace this. We got to figure this out. And we're again in part of that next evolution. I would say, since 2020, sorry, since 2000, so since Y2K, I think we've been through 4 or 5 major shifts. This one's going to be as big, if not bigger, than when we all went to the cloud in 2010. So it's an interesting, call it paradigm shift that we're going to go through, and I think there will be a lot of winners and a lot of, unfortunately, people that won't make it, but you'll see who's going to do well and who won't do well. One of the challenges I have, and what I would love to pick your brain on this one is, there's been a big push in private equity in the past couple of years. I think that in the
Yeah.
last 4 or 5 years, Toronto has seen almost 40% of all independent MSPs be acquired by PE or aggregators of sort. How do you see that impacting the industry or the market for competitors today?
Yeah, I mean, as I go look for a company to acquire, finding myself, competing with private equity, right? There's a lot of buyers out there, and then there are a lot of buyers kind of similar to mine, or I think as you as well, right? As you think about kind of making strategic acquisitions, and so it's you know it is very competitive. I think the model is different for each group, and I'll let you either talk through kind of your model a little bit as well. But private equity is about growing, scaling with an exit in mind, right? And so it tends to be a lot more about, hey, how does the company they acquire fit in as part of like their larger portfolio or platform and grow and scale it and get to that exit point. That's not a bad thing necessarily, right? But that's a different journey for the customers that are involved, the employees that are involved. And in some cases that might be great, career moves for an employee, right? And so, or even for a customer, they kind of get to be part of this larger platform. So it's not necessarily a bad journey. It's just a different journey. Um, Versus kind of what I'm doing, what I'm trying to find is that one company, right? And it's that company where the son the owner never had, or the son that the owner does have, but may not want to be in the space in this industry, right? And so it's carrying that legacy forward. It's continuing, like the relationships have to transfer, but it's trying to embody those same relationships with that same culture and care. And the outcome for a seller, financially, admittedly won't be as high as what private equity might offer, right? So it's like that's just individual priorities that someone has to think through. And then yeah, like I said, it's like I think for being part of a merging with another small business is a different journey, right? And I think again, like I'll let you speak to kind of what you see as the differences in that journey, but that also works for a number of companies and a number of owners that are selling.
Yeah, it's an interesting one, and that was my first approach when I started my acquisitions or M&A journey, you know, was approaching people or getting approached by entrepreneurs that were looking to exit, retire, transition. Their businesses were not as profitable, or they were trying to figure out, what their next move was. And we were able to kind of either acquire them graciously. And actually, one of our acquisitions happened, our first acquisition actually happened in 2006. And the gentleman, as part of that acquisition, is still working for me 20 years later, where he transitioned out and said, you know what, I don't want to run a business anymore. I'm tired of worried about taxes and payroll and AR and AP. I was just a really good technician and I want to get back to that. And so we acquired it. Wasn't a massive acquisition, but it was an acquisition nonetheless. And we were able to bring that person in, become part of our team. And 20 years later, he's still there. But I think we're seeing an interesting shift right now where, a lot of people have this misconception around rainbows and sunshines around exiting to private equity. But there's a lot of, I call it, hidden clauses and a lot of contingencies in the private equity exit that, certain milestones are being met, certain criterias are being met. Very rarely do you see these big checks being written out to these owners without strings attached to them. And if things are not as such, they have recourse.
Yeah,
And so, the due diligence and the stresses involved with that, I think when you talked about, passing the torch on a legacy, maybe the upfront number does not look as big and as juicy. But at the end of the day, I bet you if you look at the legal fees, the tax implications, all the other variables between lawyers, due diligence, and everything else, you're going to net not much different from private equity doing a deal with a smaller player or an independent looking to acquire your business, because the process is a lot simpler and a lot easier than going through PE.
yeah. The other one that you brought up about continued employment, right? So I'm talking to a company right now where there's 4 family members that are part of the company. They want to continue ownership in some way, and they want to continue employment. Different situation for each individual there. But when you add kind of the annual salary up and the potential upside of continue to own some of the equity, that number can be quite large. And it's maybe not the, hey, this is the cash I get on, at closing in day one, which also, you know, subject to tax may get a lot smaller, but it's like over time you get like, this consistent payment that you're having over many years. You have to be part of the same culture and company still, and it's your name on it. You're still the founder. That's a very different journey. Little biased, but I think that's much more wholesome, right? And you still get that payout over many years.
For sure. And the reality is prior to private equity exits and acquisitions, I would say that that was, 80% of how businesses were sold off was, you either found an employee that was willing to take it over, or you found somebody who was looking to get into the market, didn't want to start from zero, was willing to give you something for the sweat equity and be able to work it out. And over, 6, 12, 24 months, there was some sort of training, transition process so that you would not just fumble and land flat on your face. The biggest part was for me to say, okay, you know, this person who had this business for the last 20, 30, 40 years is going to introduce me to those customers, going to introduce me to all the vendors, all the suppliers, all the staff members, be part of the team, and over time hand over those responsibilities so that there is a success path. And you're not just being, aggregated into a machine today, which is we're going to strip out all the unnecessary fat from the business. We're going to, pool all these customers into our ecosystem, basically forego everything else and be done with it. I think there is something to be said about it. And, really depending on what the owner wants to see as let's call it a legacy, but also where the customers, what hands the customers are going to be experiencing. Is it going to be an owner that really is concerned about the business, or is it just going to be another stock option or another pay equity from a private equity buy sell agreement? And
Yeah,
that's really
absolutely.
a decision.
Yep, absolutely.
So, how are you seeing that? How are you getting out there on that? In the sense of finding those opportunities, and are you working with brokers today? Are you just picking up the phone and reaching out to these entrepreneurs, or is there some sort of magic, basket of businesses out there that you just pull a name out of a hat kind of thing?
Yeah, maybe all of it. The magic is the magic hat pulls out all kinds of things, and so you gotta go through a few. So there's a few paths. If anyone's interested in kind of joining, it's called ETA, Entrepreneurship Through Acquisition is the journey, and there's a thriving community around it. And so there are searchers that are backed by institutional investors to actually go conduct the search. So that's like kind of the traditional model a little bit. There are folks like me that are, like doing the search, off their own savings essentially, and structuring deals, based on the size and kind of the situation of the company. And so there's, a variety of different ways to approach kind of, the entrepreneurship acquisition path. And then there's primarily, are you going to do your own proprietary research, which is the magic hat, where you go through a number of companies, you identify what the company is, you identify the owner, of the company, you reach out, phone, email, LinkedIn, whatever, right? There's a bunch of channels there. And so you can kind of, understand interest. The enjoyable part of that, so I do a bunch of proprietary research. You just talk to people. Like it's not even about M&A, whereas in some ways, I think that's how we met as well. And so you talk to people, you understand what they're doing. And if you enjoy the industry and the space, it's just great conversations and all kinds of things come out of it, right? So, I'll talk to someone, they're like, hey, I'm struggling with sales. And I'm like, oh, I actually have a friend that's, does a great job with sales and he's helped, businesses grow. So like, let me connect you with that person, right? And so, you might actually, as a business owner, just picking up the phone or answering the email, even if you're not ever looking to sell, in the near term or long term, even you might just have a problem that gets solved. And I love doing that kind of stuff. I just love being a connector and helping people out. And so a lot of the conversations are that, and then occasionally, yes, we end up start talking about like, hey, I'd like to sell, or there's been some conversations where it's like, I'd like to partner on something, right? And so like, because we haven't talked about this, but it's like you might be doing an acquisition, and we're like, hey, how do we go partner and make something happen, right? And actually become ownership partners in something. So that kind of stuff can come out of it too. So I think of it as a search, but I also think of it as just being out there, networking and helping others out. And, you know, somewhere somehow it may pay back, in some way, and it doesn't even have to. It's just enjoyable doing that. And then there's the brokered path, like you said, like there are brokers out there. Those are like businesses for sale. They're listed, they have a price. It's almost like buying a house in a certain way, and it's competitive. And you put your offer in, and there's multiple bids in, and that's where it gets sometimes challenging with private equity buyers in there as well, right? And so as you're going through that brokered process, you're competing very directly. That's not to say it doesn't work. There are plenty of opportunities within that, for it to work as well. So there's both of these kind of models that are out there, and I try to do a bit of both. As part of my search.
Yeah, no, I agree with you. And the first approach you talked about has sort of been how we've done 80% of our acquisitions over the past 15 years or so. Um, I'm going to events, I'm talking to people, and I joke around with people all the time saying we're always up for buying people or buying businesses. Yeah, I've had situations where we were helping one company. They were a product based business, and we were helping them do services and installation services for about 6 years. And one day the guy came and said, "I think I'm ready to exit and transition to sort of a semi retire mode." And I'm like, "Okay, let's sit down and talk."
Yeah,
And the other one that actually came in, and that's how I bought our VoIP business, was a friend heard that we were always buying, and he knew a guy that was looking to exit, and he's like, "Oh, why don't you talk to Erez?" And next thing you know, I get a P&L statement and an NDA saying, "This is a company, a VoIP company up for sale. If you're interested, here's the numbers." And we made a deal, and bought a phone company. So it's it's interesting how, when you put it out there, it starts, kind of percolating in one way, shape, or another, and people start thinking about it. So
yeah,
yeah, and there's tons of deals out there. At the end of the day, it's I picked up 4 or 5 in the last 15 years. You can imagine some people doing this full time as a full time gig, and that's all they do. I'm sure they can pick up a lot more if they, especially they got good funding behind them.
yeah, yeah. I mean, I think kind of fundamentally, like I want to go provide value. Like if it's a value to a customer, like that's value. But it's like if I'm going to reach out to someone and say, hey, let's like, could we have a quick conversation? Like it's not really about acquiring. It's really about like how can I provide value? Like what can I do for you? And then you know a good percentage of people will ask the question back of like, hey, like, what do you offer? Like, what can I do for you? Right. So it's like, if you're, going to go and own a company in an industry, like you've got to engage with the industry, and with that network. And so showing that you're providing value in some way is a great way to be searching for a business. In Boston over here, we're actually starting to put together a group of MSPs engaged with AI. This intersection of like MSPs and AI is like just building that community and sharing knowledge between owners, leaders is adding value for everyone, right? And like we're just literally getting started with that, but it's just like I may get nothing out of that, like from a acquisition standpoint, but it's just like kind of getting ideas flowing with one another, and like that community itself can provide value without ever any dollars transacting between people.
Yeah, you never know. You never know. I think if you don't put your name out there and you don't interact and don't have those type of conversations, it never manifests. And I think everybody thinks it just yeah, everybody's always like, "Oh, how did you get there?" Or "You're so lucky." And at the end of the day, it's no, it's being proactive and actually cultivating it. So
Yeah, and even getting customers, right? It's like that's what it is. That network effect, the word of mouth. It's so important as you think about the sales, right? And getting another client. And I know a lot of MSP owners struggle with like, how do I get my growth, right? And it's you got to constantly be out there talking to folks and asking people to refer other customers and clients, and it takes that effort.
my favorite movie, ABC, always be closing. Baldwin's favorite line. I think he's the out of all of his roles in history, I think that is the
That's
ultimate line. Everybody knows him from it. So
absolutely.
yeah, everybody does not want to win the steak knives because those are for losers. So yeah, I love it. I love everybody. Anytime anybody tells me that, I'm always like ABC.
Always be
Always be
closing.
closing. Yeah, that's it. So yeah, first place Cadillac, second place steak knives. There you go. So yeah, so I'm gonna deviate a little bit here. So for people out there that are interested in, you know, exiting or thinking about playing that card and even finding out what their business is worth and or even having that conversation, I think there's a level of intimidation. I think that there's this concern that if I open up the kimono and I start talking about it to people, they think I'm in, I'm done, I'm like whatever, putting up the white flag. It's not as intimidating from my perspective, and I don't think that there's anything wrong with it. But how do you tell people, or what kind of advice would you tell, people out there that are looking or maybe contemplating on gauging what their business would be worth to sort of throw that number out there and get a number?
Yeah, I mean, there are absolutely, folks that are, certified to provide valuation. So you could definitely take like that formal path. But I think just, and I'm sure a lot of business owners get these, emails and messages and things like that. It's just like talk to a couple of folks that seem true and authentic, right? Like that's something like if someone asks me and it's like, hey, can you put together a quick financial model for me based on like, after we sign an NDA, like hit my P&L, like that doesn't have to lead to anything, right? It's just good to know what your business is worth, you know, because I'm in this space now, we can have a conversation about like what are some of the levers that help your business grow. And actually, have a friend that does this full time where she will work with an MSP to help them grow and scale their business and provide that strategy, right? And so um, just knowing this is my valuation, this is my levers. Eventually, I may want to sell, maybe I don't, but I just want to know what the net worth of this thing is. There's plenty of people out there that's not going to charge you any money to have that kind of conversation just to get things going a little bit, right? And so it shouldn't feel intimidating if you find the right folks. If someone's charging you for that, then like go find someone else because you can get that good quality free advice somewhere. And then of course, if you end up with a project with someone that's going to help you grow your business, then that's a different story. But um, uh, yeah, I think it's just like making it super easy and approachable. A lot of times, and I'm sure as you think through companies and acquisitions, and as you do due diligence, there's like those key levers that you're looking at, like hey, what does the customer base look like? What's the concentration of that customer base? What does recurring revenue look like? Or is it project based? And so there are these key things that even if you're thinking, hey, maybe I want to sell my business in 5 years, it's good to have 2, 3, 4 years of, consistency to maximize your valuation, right? And so this is again, it's a multi-year journey. It's for founders, this is their baby, right? And you can't arrive at that point in one day, 1 week, 1 month. It's going to take at least a few months, probably a few years to say it's like, okay, it's you know, time to transition this. And so, yeah, that's my advice is find people like me, find an advisor, or find, a strategist that can help you think through some of this stuff before you go down any formal path.
Yeah, and I agree with you on that. At the end of the day, it costs nothing to sign an NDA and to kind of go through the numbers and see where things are at, depending on how big your business is. I can tell you right now, like we had a gentleman who came in, showed me his revenues, grossing about a $500,000 a year. So this was a lifestyle business, So,
Hmm.
making whatever he was making, and that's fine. Like at the end of the day, it's a lifestyle business and there's plenty of them out there. But he was looking to exit and he knew that PE and other institutions would not talk to a firm that was generating what we would call a lifestyle business. And we were still interested in talking to them and seeing, because there are still good accounts there. There's still good customers, and why should they, be let go? So having them come to us, talk to us, look at the numbers, look at what the projections on the exit looks like. It may not be, this $1 million payout, because it won't be $1 million payout for a company that's a lifestyle business. But there's still value there. And I think that something is better than nothing, even if you're doing a lifestyle industry or a lifestyle business. Could be a family business where I've seen, the dad as the IT, the mom as the administrator, and I think I've even seen in cases where the son was the new recruit, but he didn't want to go down another generation doing this business and had other aspirations. And we talked to them and we were seeing if there was an opportunity for us to acquire the company and make it part of our organization. So it's all shapes and sizes. And I think realistically, if you've got the right partnership, I think it's critical to explore that versus just disregarding it and thinking that your business has no value, or you know there's no opportunity to discuss with other players outside of these larger institutions.
Yep. Yeah, there's also an interesting with the smaller businesses. It's an interesting distinction between, the founder, the owner is the business versus like actually having a business that can be transitioned, right?
Yep.
And again, this is like forward thinking, right? So it's if you're thinking about selling 3 years down the road, and it's you plus someone that's part time, that's a very difficult business to sell because
Yes.
the buyer will have to assume that exact role, and that's going to be hard to replicate versus, hey, you know what? Like it's going to cost me a little bit money, but I can, bring in a couple of staff to take on some of the workload. That becomes much more easier to say. It's like, hey, you're actually selling, a 3-person company or a 4-person company. And then the opposite is true too. I think we were talking about this, right? Which is like you'll see some owners make the decision of, hey, I'm going to try to make my bottom line look as good as possible to target a certain multiple, and so you're gonna cut costs and you're gonna cut staff, and your top line's not growing. It's easy to see that stuff when you go through due diligence. So it's like, also don't cut your business off of the bees, with the anticipation that you're maximizing the outcome here, because um, that's the stuff that will prevent a deal from happening. Sometimes, late in the game as well, right? It's like after you actually sign, a letter of intent and, or, going through the deal structure, and you have a purchase price in mind, and they, like, comes out in due diligence, and it's just like, hey, you know what, like this deal's going to fall through, and that's its own stressful journey.
Yeah, it's an interesting one, and I love that. We talked about that before about how we've seen companies that were doing a mil, 2 million in revenue, making a whatever, let's call it an EBITDA of $500,000 a year, or even whatever $300,000 a year EBITDA. Next thing you know, they're approaching $1 million in 2 years, and I'm sitting there going, how did you go from a 20% margin to a 40% margin in the same company in 2 years with a nominal increase in revenue or even flatline revenue? We know it's not hard to understand that you've cut staff, you've cut expenses, you've cut marketing, you've cut every imaginable dollar to make yourself look more attractive. But at the end of the day, that all gets added back into valuations because you know that you've compromised the company now and it's a matter of time before it's going to bleed. And the worst thing I can imagine, and it's happened to people that I know, they get to the non-negotiating table, they've got their LOI, they've got the lawyers, they've got the investors, they've got everybody, they've spent 100 grand in all the paperwork. And next thing you know, the PE firm or the larger acquirer says, well, now your company's actually worth less than the LOI or the original anticipated because we've done our due diligence and we've discovered anomalies that we're not going to be able to pay you out the amount. And next thing you know, it's like, well, you're so far committed down the road that you're just settling now on a lesser amount just to close the deal. And
Yep.
that is
Yeah.
something that will happen.
Yeah. I mean, I think only 1 out of 3 deals end up actually going through. So 2/3 are like, dying at that negotiating table after the LOI has been signed. And it's, again, it's like it should feel, even though it's a transition and there's a lot of emotion involved, like the more it feels like we're partnering together on this transition versus feeling at opposite ends of the negotiating table and trying to play games and posturing. Like, I don't think that, like it reduces your odds of a successful outcome.
You just said something really intriguing about, finding that person that feels like it's a deal, like reciprocating relationships and benefiting everybody. How do you identify on your side? So we're the buyer side, you and I, okay?
Yep.
And I meet Joe, Stephanie, business owner, MSP owner, looking to possibly transition. Mentally, how are you identifying if, besides the numbers, because obviously numbers are always one of the variables, what other factors are you considering as a purchaser when you're looking at it as part of the deal?
Yeah, I mean, I think there's a couple of things to it. One, talking about kind of partnership and feeling like, yeah, I can actually work with this business owner. That's like it's a relationship thing. It's just like, can I build a relationship, even if it's over a shorter period of time that we're going to be together, or 6 months or a year? Can I build a relationship as part of this transition that feels like we could collaborate and work together really well? And so I look for individuals like we've all worked with people that have been good to work with and bad to work with, and good friends, and friendships that go bad, and so it's relying on those kind of interpersonal skills, to evaluate like, hey, are we both showing up with best intentions and honesty and transparency? And so that's like the first layer maybe to think through. Then when it actually gets to the deal itself, yeah. So like you said, it's the financials or kind of piece of it, but it's kind of in most cases you can't meet the team, but it's like what's the culture that they built, right? Like, can you feel and sense the culture of the company? Does it feel like the culture that I'd want to carry forward? So that's a piece of it. Same thing with the customer relationships, right? Like, what do those customer relationships look like? And you can actually put some numbers behind, customer retention and things like that. So it's like you can get a sense of like, what that looks like without talking to the customer, but you can feel it from talking to the owner itself of, hey, like they've been there, with this customer, and there's a friendship that's been built over time. Of course, that's if the owner is transitioning out, like that's something you have to carry forward. So you have to feel confident that, you can carry that. But it's like, did they authentically and honestly work, with that customer where it felt like a partnership versus like totally transactional? And so that's like some of the intangibles that I'm looking for. And then when it comes to actually structuring the deal itself, right? Kind of how willing the seller is to participate in, the the future of the company. It can vary in different forms. It could be like, yes, employment and like continuing to work as part of the company. It could be in the form of like, I'm actually going to roll some equity, and so I have that second bite of the apple, but like I have a vested interest to make sure all the customers stay and the business continues to grow and succeed. And sometimes it's in the form of financing and debt, essentially, where the seller is get paid out over time, a certain percentage interest on top of that. But similarly, they actually care about the success of the company and not going sideways, because that means they're not going to get their or at least the debt will get harder to pay back over time, right? So those are like kind of some of the structuring things that can help it show the intention of like, hey, I want to be a part of the success of this company, and I'm not selling you a lemon.
Yeah, I agree with you on almost all those points there. My biggest one, and I'll echo what you were saying about culture. You know, as an owner, as a business owner, you have to make a sense that, can I work with this guy? If this is how he operates his business or she operates her business, is that going to be the way we jive? Is it going to conflict? Are the customers going to be not happy with the way that, hey, wait a minute, this company's not what I'm used to. It's not the way we operate. It's not the way this guy's, this organization's been running our IT, or how we're getting the service up to now. And the culture's different. And so culture's a big play in the success of acquisition, I feel. So yeah, I'll echo on that one. And I find that there are so many ways to exit that everybody's focused on one or two, three different ways of doing it. Talking about, financing debt, or, seeing if the owner will, you know, keep some equity in there. Depending on the longevity of the relationship, we've even structured it, call it an equity earnout, right? So, we've had a situation where a gentleman was looking to retire. He was 60 years old. He told us, "Hey, I want to, call it a retirement party at 65, but I want to sell you, let's call it 20% of my equity year over year." And we worked out a deal that we acquire 20% of of the company annually while we paid him out. And during that time, relationships were transitioned, contracts were moved over, and there was a lot of time to make that happen. Now, those are not common because a 5 year stretch is pretty long, but 1 to 3 years is not unreasonable to kind of sit down and think, okay, you know what? Can work in this to make sure it's successful. And as a buyer, I'll typically put in, I call it a cherry, right? So, like, if there's more than success, they get actually a bonus, not just the numbers we negotiated up front, but hey, you know what? If we took your business from $1 million a year to $2 million a year using your contacts, our relationship, and our process, because we're more growth driven, or our processes can help take it to the $2 million mark. And I'm just using the one and two number, it could be from 5 to 10, it doesn't matter, but
Yep.
if we've seen growth over that period, that founder can now look at getting, maybe 20% more than what they anticipated because now it's a joint relationship.
Yeah, no, absolutely. I mean, I think there's a lot of ways to structure it so the incentives are aligned and there is better outcomes for a growing business. I love that. That is like a leverage of the 5 years is really interesting. It is very unique and it has to be with the right person. Like again, this is where the relationships matter.
Yeah, I won't recommend it to every deal. That's for sure. That one was a long one. Typically, it's 1 to 3, and
Yeah.
3 usually is the max I go. But I would say a good 1 and 2 year transition period is very healthy to sort of say, hey, especially those smaller sub $1 to $2 million deals where the owner operator knows almost all the relationships and is all the relationships. It will take 6 to 12 months just to start handing those relationships off.
Yeah, absolutely.
Being respectable of your time today. I just wanted to know, like, what would be the first step for anybody out there today, you know, looking to, and it may not, we're on the East Coast, you and I, right? Boston, Toronto, we're shopping the market. This is going to be an interesting one. Two buyers, are on a podcast, talking about acquisitions. We're on the East Coast. I won't lie, I'm not looking for any West Coast opportunities, but I'm just not keen on those logistics. I already made one acquisition in Vancouver, and it was pretty hard to fly back and forth every time to see accounts and do those relationships. But I'm going to say I'd like to keep it closer to home these days. But even in your backyard, what would you say today? If somebody's looking to make an exit or looking for an inquiry. What would be the first steps besides reaching out to you or me? How would they go about getting their stuff in order to reach out?
Yeah, I mean, I think there's, a couple of things to do, right? One is understanding how the process works. It's a journey and it's got a bunch of different steps in it. And so I don't have a book recommendation off the top of my head, but I know there's definitely been some books written on the sell side, right? There's some buy side ones as well. And so just understanding how the process works, I think, is a good first step in education. Then it's starting to kind of think about like, okay, what are the pieces of the business that I just have to have in order. Accounting's a big one. Like the number of businesses where it's like the seller shows up, it's like, okay, I'm ready to sell, but then, the accounting, is just isn't there yet. And so it's going to take a little bit of time to just like make sure like, you have all those pieces in place so it's easy to transact. And so that's one. We talked a lot about the different models of acquisition, of private equity, and you as a company buying other, MSPs, and me as an individual going out and acquiring. So knowing your priorities as a owner of like, hey, what do I want to prioritize first? Is it my customers, my employees, or is it the headline number? And so it's being able to then understand like, okay, what's the ideal fit here, right? So I'd say doing that internal thinking as a first step, and then starting to, again, it could be the reach out to folks might be, hey, I'm just going to get some, external advice on some of this stuff, right? And finding kind of that strategist or someone that can be an advisor, I think is a great kind of first step. I think if you were to reach out to a broker, not that I've done it personally, but I imagine that you probably feel a little bit more pressured of like, hey, I got to go list this thing right away, right? So there is kind of an element of like just finding the right person to go talk to you know, again, dip your toes into it a little bit more. And then, I think there's a decision to make of like, hey, is it could be a broker process, or would you want to just start soliciting the inbounds that you're getting and starting to like, do it yourself as a seller a little bit. So again, I think, there's, if you have a broker, you're paying a fee and you're taking that path, right? But you are getting like a much more professionalized experience, from that. So anyway, so there's I think definitely a few steps that you can start taking if you're selling your business.
Yeah, definitely. There's a lot of options out there. I will say the hardest one that I've seen from all the acquisitions we've made is the emotional side of being ready to let go out of all of it. Like
Yeah,
everybody's come to me, yeah, I want to get out. I've sent the contract, I've sent the legal documents, and then it's like cold feet. And or they're dragging their heels because they emotionally now are putting their name on the line and it's over. And so I would say, first and foremost, besides the numbers, besides the, let's call it the reward or the transition, you mentally need to be 100% ready to start this path and ending a relationship that you may have had with you and this business for 20, 30, 40 years in some cases. And if you're not emotionally ready, no matter how much money you're going to be thrown at you, it will be a very hard day. So yeah, and I'd say there's an option for everybody out there. So if you're a sub-$1 million business, there are players out like you and I who would most likely have a conversation. If you're in a sub $3 million business, again, same story. There are a multitude of options. And then if you're obviously over $3 to $7 million range, the doors start really opening. And obviously north of 10 million, chances are you're thinking private equity exits because at that point in time, that's going to maximize your dollar revenue on an exit strategy versus looking for, an aggregator or, private buyer because just you don't have deep pockets enough to kind of go against the private equity. So I would
yeah,
say those are the 3 tiers, maybe 4 tiers of sizes to buyer ratio that make sense, and all the people you mentioned about, agents, brokers, advisors, I think those are all pieces that you need to put together to make it happen.
yeah, that's well summarized.
Well, thank you. One expert to another. There you go. I love it. We could have got another hour on this one, but Rupak, I want to thank you for coming out to our show today. It was really awesome collaborating on, maybe our next strategy is now, you know, basically knocking on doors and telling people you want to sell me your business type of thing. Who knows? Be we'll be hitting the pavement there. But thank you for coming out on our show. It was really great having you.
Thanks, Therese. Appreciate it. Appreciate the invite. This was a lot of fun. Looking forward to maybe partnering down the road or coming back at some point and talking through more of this journey or a different journey. It's been a lot of fun. Thanks, Therese.
Excellent. Well, thank you everybody for listening to on our show today. If you like, please like and subscribe. We're always thinking about you guys, thinking about your next move, your next business venture, what's happening in your industry. We're not just about technology, we're about every aspect of the business out there. So thank you for listening. We're looking forward to seeing you again. Have yourself a great night.